Morning, everyone. We're just going to wait for a couple seconds for everyone to file into the webinar, and then we'll get started. Okay, just seeing a few more people filing in, so we'll get started here in a few seconds. Okay, we're a couple minutes past the hour. It looks like our attendance has leveled off somewhat, so we'll maybe get started with some just a few opening comments. So good morning, everyone. My name is John Stewart-Bischoff, and I'd like to welcome you to the webinar this morning. The focus of this session is compliance promotion for our 2021 reporting year. And of course, also opportunity to ask any questions you may have as you prepare your 2021 compliance reports. So this is a session that we'll generally aim to have annually to share information and to address questions ahead of the yearly compliance reporting. This year, we also have some members of our air and climate policy team to give some updates on upcoming engagement on the TIER program, as well as on methane reductions and methane regulations. We're recording the webinar and plan to post it along with the slides to our website in the coming weeks. We are also using the Zoom tool today. And so if you have questions, we would ask you to submit those through the question and answer tool, which should be available at the bottom of your screen. If we don't get to your questions today, or you have questions outside the scope of the conventional oil and gas focus that we've got for this session, do please feel free to submit your questions to our AEP ghg@gov.ab.ca mailbox, and we'll respond to them there. Maybe if we can move to the next slide, I'll go briefly over the agenda for today. So we're going to give a little bit of an update in terms of compliance for 2021, as well as a little bit of our results and a few observations from the 2020 year. We're going to have a little bit of an update or a little bit of information available for folks on the specified gas reporting regulation, as the deadline for those submissions through the single window reporting with Environment Climate Change Canada is also coming up. We will talk a little bit about the enrollment and the registration through the TIER program as an aggregate. We're going to talk a little bit about the benchmarking, that is work that we're still undertaking. We'll talk a little bit, as I mentioned, about the upcoming tier review, and a little bit also about the upstream oil and gas methane regulations and updates to those. We're going to have a dedicated time at the end for questions and answers, but we'll also pause to take a few questions after each section of the agenda today, in case there's some burning issues. But we should have plenty of time for questions at the end of the day. Okay, and then I'll kind of allow each speaker, as we kind of move from section to section, to introduce themselves. So our next section, Christina is going to speak to, and that's the compliance updates. Go ahead, Christina.
Thank you, John. I'm the director of the conventional oil and gas team. I've been in the position almost 5 months, and affectionately known as the COG team. So this first section here is designed to provide a high level of the compliance update for the aggregate sector, and each subsection will be led by the team lead, and you can delve into more specifics further along the presentation. Before I begin, I'd like to give a shout out to Patrick Forsyth for providing us with the statistics and the next 3 diagrams. So thank you for that, Patrick. These were used for a previous federal government engagement session. Basically, this chart is to illustrate on an energy equivalent production basis that there's a high degree of aggregate enrollment in the tier program. For the 2020 production energy equivalent coverage, excuse me, by aggregate facility type. So if you look at oil production, we had 93% enrollment. We had bitumen production enrollment of 96% and gas production of 96 as well. So Patrick created these categories to align with the Environment Canada's climate change facility groupings. And not shown here are the gas processing at about 40% for aggregates, 55 large emitters and opt-ins, other facility types, such as injection facilities with lower enrollment. This next chart shows aggregate facilities account for 12% of the total regulated emissions under the tier legislation in 2020. So at present, only emissions from stationary fuel combustion devices are quantified for aggregate compliance obligations, unlike large emitters and opt-in facilities. So this 18.61 megatons of CO2 equivalent could increase dependent upon future additions to aggregate quantification methodologies for total regulated emissions. So Patrick's third chart here illustrates aggregates relied primarily on fund credits, 1.2 megatons, to meet true-up obligations. So when actual emissions exceed total regulated emissions, this was expected for the first compliance year, but as we go through, we may see more of a shift and an increase towards emission performance credits in subsequent compliance years. So the 0.36 megatons of emission performance credits requested was really indicative of reductions from benchmark period. This was observed when actual emissions were less than total regulated emissions. So true up of 10% reduction in emission intensity is what we're looking at from benchmark years. The 2020 true up compliance rate of active aggregates and submitted compliance reports was 98%. So AEP issued 5 compliance orders, which were paid, and we canceled those orders. So non-active aggregates were about 10% and are not included in this 98% compliance rate. basically due to insolvencies, mergers, acquisitions, revocations. And so there were noted challenges when reviewing the 2020 compliance report. Obviously, we have a massive data set. When this program was new, it was stood up very quickly. It's a dynamic landscape of changing facilities with mergers and insolvencies. Also, human error. This was the first compliance report which was received. So there was a lot of human error emissions. We've got some IT concerns starting up such a large database. So yeah, I think with the 98% compliance rate, we can, you know, that's a pretty high rate for the challenges and turnovers, industry turnover in staff, also internal AEP turnover in staff. So yeah, for a year for first compliance reports, many challenges, obviously the COVID, which our internal team here is experiencing in the last 2 weeks here. So there's been a lot of challenges to stand up such a huge program. And in 2022, so now we have almost 250 aggregate and operators in the system with roughly 60,000 facilities. So it's a huge program, huge database. And yeah, for a learning year, there's a lot of wins that should be acknowledged. And on this last slide here, so 2020 compliance report, we were looking at $30 per ton. With the 2021 coming up due in June, that'll be a $40 per ton. And in 2022, that will be going up to $50 a ton. So a reminder to please use the most latest confirmation of regulation notice for a given year. For amendments, compliance, reporting, benchmark, all of that applications, please ensure again that you're looking at the most recent compliance confirmation of regulation that was received. All compliance reports need to be third-party verified, and that includes the benchmark applications. So again, June 30th of this year, 2020 is the deadline for the 2021 compliance report. And I know many of the operators on the line are still waiting for their facility-specific benchmark assignment for that 2021 compliance report. And John will address that in a subsequent section in this presentation. Thank you, John. And we are off to, I believe, Shaheen.
Yeah, we'll see if there's any burning questions on that section before we move on, maybe.
All right. Patrick Kitchen is on, I think, has a question here. Will AEP be engaging industry work collaboratively addressing aggregate reporting issues identified? Absolutely. It's an ongoing concern. Oh, thank you. John has answered that.
Yeah, no, I think, sorry, Christine, I just tagged that we're going to answer that live. So yeah, absolutely. Yeah. I think we're working with facilities. In some cases, we've reached out to folks on their 2020 compliance reporting. In other cases, we're still working to do that if there were any issues observed. And we're also, I guess, setting up our systems internally to automate to the degree that we can some of the assurance that we do on the compliance reporting that we receive. Okay, we've got one other question on this section, I think. So when will Alberta know the price of carbon past 2022? Do you anticipate it will follow the federal price schedule? So I think we've heard clearly from stakeholders that there's an interest in Alberta remaining the regulator of industry in this greenhouse gas space. And so one of the, I guess, requirements for the Alberta tier system to be in place in Alberta and for the federal output-based pricing system to stand down is the, I guess, the adoption of the federal price schedule. So I guess our understanding at this point is that that we will be pursuing a tier as the regulation within the province, which does mean the adoption of the federal price schedule. Okay, we'll take a couple more, and then we'll move on and hold some of these questions maybe for the Q&A. Is the disproportionate use of fund credits in 2020 a red flag in respect to the mandated undersupply of carbon credits required by the federal government beginning in 2023? So right now, we have, I think, a more than ample supply of credits in the tier program. I think our impression of the choice of fund credits for 2020 in the sector is maybe twofold. One is maybe a bit of newness to the program, and people still getting an understanding of the credit market and the ability to use credits for compliance. I think the other thing that we saw generally that was consistent between aggregates and the large emitters and opt-in facilities is a fairly high use of fund payment for the 2020 year. I think in anticipation of the price increases that we're seeing in 2021, 2022, and likely beyond that. So I think those are the two main drivers for the high use of the fund credits. Okay, and maybe we'll just take this one more. The data presented on aggregates, do you have the percentages broken down by production class, large, major, or sorry, large, medium, and junior micro producers? We don't have that broken out at the moment, but that's an interesting dynamic in terms of the composition within the aggregate groupings. So thanks for the question. It might be interesting to undertake that analysis in the future. Okay, maybe in interest of time, we'll hold some of these questions for a little bit later in the session and move on to Shaheen's presentation on the specified gas reporting regulation.
Hello, everyone. Welcome to our session this morning. My name is Shaheen Manji. I am the program lead for the Mandatory Greenhouse Gas Reporting Program. Today, I'm going to be speaking on the Specified Gas Reporting Regulation, known as SGRR. I'll speak to a little bit of a background, and then I'll continue on with the updates for the 2021 reporting cycle that we have established for this year. So there is a few changes that we'll be speaking on to. So the Specified Gas Reporting Regulation, SGRR, is the mandatory greenhouse gas reporting program for the facilities that emit over 10,000 tons of CO2e per year. For the conventional oil and gas facilities, this includes emissions from all the sources at the facility, not only stationary fuel combustion. The Specified Gas Reporting Regulation builds on a voluntary reporting by Alberta emitters since the mid-1990s. The regulation and the standard were passed in 2003. And currently, we continue to collaborate with Environment Canada, Climate Change Canada, to use the federal one-window reporting system, commonly referred to as SWIM. In this system, the reporters that meet the 10,000 ton threshold are able to report data for both the federal greenhouse gas reporting and for Alberta under SGRR, the mandatory reporting. The intention here is to streamline reporting and reduce redundancy for the reporters. The emission data that we collect from the reporters are used for policy development and analysis, and we support the federal national inventory reporting. Just a quick reminder that the reporting deadline is June 1st, and the standard will be posted shortly. Next slide, please. So the three changes that we have established this year are, for the boundary files, we still would like the boundary files and geospatial files to be in KMZ and KML format. As the other formats, we can't put those files on a map. And if you have submitted a file in the previous year that is unchanged, you are most welcome to submit the same file, or you can skip this when you're doing your data entry. It will give you that you have submitted. And if you haven't uploaded a file, it won't let you move to the next field. So we are trying to remove duplication of files in our database. And the other change is under the national, on the Northern American product classification system. In here, we still want the product to be reported, but the product quantity and the units have been removed from the SWIM system. And the third change is with the numbering of the equations. These didn't align last year. So we have tried and worked with Environment Canada to try and synchronize our quantification methodology documents and the equation numberings to reflect to this change. So people who are reporting stationary fuel combustion in the expansion phase will be able to see those changes in the SWIM system. Next slide, please. So this is the same slide we had last year, but I will just go through it a little bit more. So the facilities that are regulated in the tier must use the methodologies in the Alberta quantification methodology, but the non-tier facilities may either use the Alberta quantification methodology or the quantification methodologies from CCIR and the specified gas reporting regulation from previous years. For the specified gas reporting regulation, facilities may use any tier methodologies. Tier 1 methods in these documents are aligned with the minimum requirements from Environment and Climate Change Canada requirements. And SGR reporters may use a higher tier of methodology if they wish. So those are all the changes and updates that I have, but if there's any questions, I can take some, or we can answer them later on. Thank you.
Thank you, Shaheen. Not seeing any questions jump out on that part of the agenda. Maybe we can move on, Dragon, to talk about some of the enrollment.
Thank you.
Good morning, everyone. It's Dragan Pejic that I'm going to be presenting the section on the aggregate facility enrollments and related deadlines. And let's start this section with basically the roles of the applications and forms that are needed for the enrollments and amendments to the aggregates, as we are getting a number of questions about it. And just to clarify it a little bit. So basically there are two main applications that are being used for enrollments and amendments. First one is conventional oil and gas facility aggregate application form. In the presentation slides that you will receive after the engagement, this is a live link, so it can bring you to that form directly. So this form is strictly for applying for a new aggregate facility. The second form, aggregate facility change form, serves the purpose of either amending an aggregate in sense of adding facilities to it or removing facilities from an aggregate. The third form that you may have seen is the tier notification form. Again, it's not an application, it's a strictly means of notifying the department about the change, which needs to be done as soon as practicable, and it's not a form that is being actioned by the department. But when this form is being used? Basically, when there is a new person responsible for the aggregate as a whole, this form needs to be sent. Also, if the new person responsible has changed for some of the facilities within the aggregate, then if facility or facilities within the aggregate have been decommissioned, and lastly, if the facility within the aggregate has exceeded 100,000 tons CO2e emissions per year limit, which basically puts that facility into the large emitter category. We will go through some key points during the application process that basically you're getting questions about. So it's to remind that when making application, please make one application per aggregate facility. We do recognize that form kind of allows you to put multiple aggregates in it. It's something that we will address, but please provide one application per aggregate ID. Also, if you are requesting additions for 1 year and removals for another year, please use separate forms, because otherwise that would kind of create back and forth with us and slow down the processing of the application. It is very good when a check is being made by the new person responsible if those facilities were already in tier, and we would encourage applicants to check with the previous, whenever acquisitions happen, to check with that other company if they have facilities under tier that are being acquired. Again, the less back and forth with application, the sooner the application will be approved. And something very important about any application regarding amendments or submitting benchmarking application or compliance report, please check the latest letter from AEP on the composition of the aggregate before submitting your application or report, as we are seeing currently quite discrepancy between those, and at the end of the day they got results, but again it's about the timing and kind of more efficient processing, and you get your confirmation letter sooner. Also to remind about conventional oil and gas facility definition here. As you know, aggregate can be comprised of 2 or more of those, and conventional oil and gas facility by itself is basically an entity that's comprised of, could be comprised of number of facilities, or so, including Petrinax facilities that operate in an integrated manner and are in a close proximity. You can give a name to conventional oil and gas facility, whatever fits you, but it's important to kind of note that this entity can be comprised of multiple batteries, let's say gathering stations and other Petrinax facilities. Petrinax facility ID, that's pretty clear what it is. However, if you do not have one at the time of application, you still encouraged to submit your application and submit the Petrinax facility ID later on when it's available. And like the common situation here is, let's say, drilling incompletion. So in that case, just please leave the Petrinax ID field blank. We would appreciate if in those cases when you do leave a field blank to provide extra brief comment in the statement section so that the reviewer of the application is aware was the background for that. Boundary file names. Yeah, they are mandatory for any facility exceeding 10,000 tons of CO2e. Please include this boundary file in every amendment to your aggregate. If that amendment includes a new facility that was not in your boundary file previously submitted, let's say last year or so. We also are moving from now on accepting applications through ETS, Electronic Transaction System only. It has been proved as a pretty robust system, and we encourage you, if you do not have ETS account, to and plan to do amendments to your aggregates or create new ones down the road, please create one so that you are prepared for that phase. Should you experience any issues with submitting application through ETS, here is the contact information from the ETS support team. As you know, we are not managing that directly, but if you continue to experience issue with that and you feel that you're not timely supported on that, do contact us at AEP-GHG and tell us about it, and we'll follow up. But do not email, please, the application unless we instruct you to do so. Also to remind that benchmarking applications and compliance reports will continue to be accepted through an email. In any inquiry regarding your compliance, enrollment confirmation letters and amendments letters, please include the 6-digit ETS request number. We do encourage you to sign up the application within the original form, as preserves the integrity of the application itself. We have prepared, as some of the applicants have been experiencing issue with that, we have prepared a guide for signing T regulation form. Link is here, and I would encourage you, if you do experience those issues, to go through that guide, which will no doubt help resolve that. But then, even if that doesn't help, then please provide a separate PDF document including all pages from the original application and have it signed by the certifying official. There is a change to ETS made, which now allows applicants to submit the PDF documents alongside of the original application form. But again, please use this option only if you are experiencing inability to sign the original application form. And we do appreciate if once a letter from us has been received, to verify it for correctness and contact us within the 2 weeks period in case you see discrepancies. Sometimes sometimes we hear about confirmation letters months later, which kind of makes it difficult both for us and for you to follow up timely and correctly, I should say too. This is basically just showing screenshot of the ETS tier menu in which you would be submitting the applications through it. The red circled terms are the ones that you would select in order to see the history on your submissions to us. And as you can see, these six digit numbers are the request numbers for applications that we would like to ask you to include in your inquiries about it. This is pretty dynamic sector, and we are seeing lots of acquisitions and mergers taking place. The partial acquisitions or only acquisitions of the facilities in those cases, just to remind that individual facilities registered within an aggregate and acquired within a compliance year remain part of that aggregate for the full compliance year. In case of company acquisitions and mergers, also to remind, reporting duty under tier stays with the original company for a year of merger or acquisition. But we will work with the new company to report on behalf of acquired or merged person responsible if our assistance is required or any issues arise. For subsequent years, the new company can apply to take on the aggregate, create a new aggregate with acquired facilities, or merge it with the existing aggregate. In those situations, most of the time, re-benchmarking will be required. So these are the three steps basically that in most cases apply to acquisitions and mergers. Of course, there are different variations to it, but in like vast majority of the cases, these are the three steps to take when those things happen. So first one would be basically to submit the tier notification form by the existing person as possible, as soon as practicable. Again, the form is not actionable and will not result in any follow-up, but it is a requirement under the tier regulation. So then the existing person responsible would request a removal of the facility from the aggregate for the following year using the aggregate facility change form. And the new person responsible would be submitting aggregate facility change form to add facility into their aggregate for the following year. These are the deadlines for aggregate facilities for the remainder of the year. On June 30th, compliance report is due for 2021. On September 1, you can request for a review of the aggregate facility specific benchmark for 2022 for existing aggregate facilities. Also, application for benchmark unit and benchmark for new aggregates with the first compliance report due in 2022. The date is also a deadline for notification about selected benchmark reference years for new aggregates with the first compliance report due in 2022. On December 1, the December 1 deadline is for applying to add the facility to an existing aggregate facility for 2022. Also to apply to create a new facility for 2023. Should this deadline be missed for creating new aggregate facility for 2023, please do contact us. We'll work with you and see if something can be done on that. The same thing if you are late to create a new facility, a new aggregate facility for 2022, please do contact us, even though the deadline has passed, and we'll see if that can be accommodated. And then December 1, of course, is deadline for removing facilities for the following year, for 2023, as well as for revoking an aggregate facility designation for 2023. We would encourage applicants to submit applications well in advance in December 1st deadline. I mean, as you can imagine, and with the number of facilities, number of aggregates that would need to process, please do it a little bit well in advance of this December 1st deadline, if possible, of course. And lastly, just to touch on the federal fuel charge, which is of course a quite important topic for everyone in aggregate facility program. Just to note here that we are not managing this program, and the slide in front of you is basically to remind us some of the facts that ECCC, Environment and Climate Change Canada, has communicated to us and to applicants. So yeah, federal fuel charge is applies to fuel that are combusted or flared, and you would use the statement from ECCC to register as an emitter with the CRA using these two forms, L400 and L401. And then you would use L401 exemption certificate to present it to the fuel supplier. Registered emitters must file a B400 return monthly, including for nil returns. The effective date of the ministerial statement from ECCC is the date when a complete application was submitted, or the start of the compliance period, whichever is later. Endorsement letter from CRA has the effective date of the date of registration as an emitter, and fuel charge exemptions prior to that date are not eligible. Personal responsibles must notify ECCC if they cease to be the operator of the aggregate or any facility within the aggregate, or a facility within the aggregate is no longer under tier, or facility boundaries have changed. And for more details on this program, please contact ECCC at the email shown on this screen. So that would be the slides I was wanted to communicate. So if you have any questions at this point, please let us know.
Yeah, Dragon, we've got a few questions that have come in. So I'll read it out, and if you want to take it, let me know. So one question is, how does the December 1st deadline of adding new facilities to an existing aggregate reconcile any new activity in December production month, when this info is not released corporate-wide, typically, I think, until into the new year?
Does that question relates to not being able to provide facility ID? Because companies can, if they know that facility, that drilling will be taking place or facility will be operating in December, even the first deadline, they can put the placeholder for that, and then we will follow up beginning next year to update the facility information. Would that be the
Yeah, I
concern
think that's useful. Maybe the other thing I'll mention is, again, the actual compliance reporting under tier is done on a calendar year basis, and it's due in June 30th of the subsequent year. So this December 1st deadline is really about the registration of sites into the aggregate, or I guess request for removal from the aggregate for the coming year. So you don't have to have any fuel use or production data for those sites at that time. It's really about what sites are intending to be included in your aggregate for the coming calendar year. If that also helps. Okay, we had one question here. Will AEP automatically move facilities between aggregates based on January 1st operatorship if no change request reports are submitted by the current or previous operators? So maybe I'll take a stab at this, and Dragon, you can supplement, I guess, if you want. So we do automatically at the end of the calendar year do a cleanup, and really what that's about is removing sites from aggregates where the prior person responsible is no longer the operator of record. At the end of the calendar year, those sites will be removed from the aggregate for the upcoming calendar year. So the trigger is more kind of the end of December rather than saying January 1st. And that doesn't mean that we're adding anything to any aggregate. This is the thing that we're doing at that point is a removal only. So if you want to have those sites added to a different aggregate, that has to come as a request to us. So we will automatically go through and clean out facilities for the upcoming year where the prior person responsible is no longer the operator of record, but we don't in any case automatically add sites to an aggregate. Anything to add there, Dragon?
No, that's perfect. Thanks.
Okay. Maybe here's a question from Keith, Dragon, if you wanted. If plans to abandon multiple facilities in a given year, what is classed as reasonable timelines to submit the notification form, quarterly, annually? So maybe if you could just refresh on the purposes of the notification form, maybe that would help.
Right. So it does, the regulation does refer to it as soon as practicable. I would say within weeks of that, certainly not months, but we would appreciate within weeks of that happening to notify us. Again, also to remind that no change will be done to the aggregate anyway. It's mostly around awareness about the change at that point. And then you would apply consequently to remove those facilities. I mean, to amend your aggregate accordingly for the following year.
Okay, great. There's a couple of questions on benchmarks and tier review that I think we're going to get to in some of the upcoming sections, so I'll maybe skip over those. So there's a question here: for CRA purposes, would the acquiring company of a facility within an existing aggregate from the company the facility was acquired from still be exempt from the federal fuel charge? In this case, the acquiring company, say, is already in tier. So maybe I'll take a stab at that, and people can fill in the gaps that I leave. So so in a case where you have an acquisition partway through the year, and that facility, those set of facilities will remain in tier for the year, the new owner can request from ECCC to get statement numbers for those facilities that they've acquired that are in tier as the new owner of those facilities. And so because they remain in tier for the year and the new party has an ownership interest in them, you should be able to receive statement numbers from Environment and Climate Change Canada. And once you have those statement numbers, that should enable you to apply your existing exemption certificate from CRA. As in this example, it says that you're already under the tier program. So the crucial step, I think, in the answer to this question is to request statement numbers for those sites that you're acquiring from Environment and Climate Change Canada when that acquisition occurs. Another one here, is there a mechanism for operators to recover federal carbon tax already paid on purchased liquid fuels when an exemption certificate was in place but not exercised? Is it preferable to have these fuels regulated under tier to ensure benchmarks are accurately quantified? So there's no way to recover that federal carbon tax from CRA within tier. If you've chosen to pay the federal fuel charge on fuels when you had an exemption certificate in place, those fuels don't need to be included in your tier compliance reporting. So as an example, some people obviously may, rather than trying to account for fuel use on site and off site, like for example, for on-highway vehicles, they may just pay the federal fuel charge for fuel for those on-highway vehicles, in which case the emissions from those vehicles when they're used on the tier facility sites don't have to be included in the compliance reporting. If there's some exceptional circumstance and the federal fuel charge exemption wasn't executed in cases where it normally would have been during a benchmark period, please do contact us about that, and we'll happy to discuss and figure out if it makes sense to include some of those emissions in your benchmarking. Okay. We'll just maybe take one or two more here. The effective date on the approval letter from ECCC is the date when it is the start of tier. Can the effective date be before the letter is issued, retroactive? So my understanding is that ECCC typically would date their letter back to the time when they received the request for the statement numbers, and not typically further back than that. But that's a question too that you could follow up with ECCC on if you need more detail. Okay, maybe we'll, in interest of time, let's move on and hold some of the subsequent questions till our Q&A period. I think next up is, I guess, is perhaps me. Okay. So I was going to speak a little bit about where we are in the benchmarking process. No, you can leave the slide there. That's good. So as many people probably realize, 2021 benchmarks are still being issued. We've got about a third of them issued at this point. I guess one of our observations moving from 2020 to 2021 is that only about a fifth of our aggregates had consistent populations of facilities within their aggregate between 20 and 2021. So that means that we have gone through and are just finalizing some QA/QC on a process to quantify the effect, I guess, of the change in the aggregate populations that we've seen from 2020 to 2021, and how that potentially affects the benchmarks. So far what we've seen is probably that more than a half of the aggregates with updated populations in 2021 have a sufficient impact from that change in population that we probably have to do some adjustment to the benchmarks to take that into account. Next slide, please. So what we've done there is that we've evaluated the changes in 2019 and 2020 Petrinax fuel use and production that is caused by the change in the membership or the facilities that are within the aggregate for 2021. So basically, we're going back to see, okay, if you have a certain population of sites for 2021, and we look at the Petrinax data for those sites, how would your emissions and production have been different for 2019 and 2020? And again, in some cases, people are using 2019 and 2020. In some cases, people are using 2019 for benchmarking purposes. In some cases, people are using 2020 only, or in many cases. So basically, where this change in the aggregate population results in a fuel use intensity change of more than 2%, kind of upwards or downwards, we're looking to adjust the FSBs for 2021 accordingly. So I guess as an example, if an aggregate has requested to use 2019 and 2020 data for benchmarking purposes, we're casting back the 2021 aggregate population to the 2019 and 2020 Petrinax data, and we're seeing, if that causes for an example, if that causes the historic fuel use intensity to increase by 3%, we're looking to make adjustment upwards by 3% to that to the data that we have for that aggregate before we apply the 10% reduction target. So again, we're doing these comparisons on a fuel basis, as the emissions methodologies may vary across the aggregate. And then another thing that we're looking at doing is that if those changes are substantial, so if it's more than 10% of a fuel use intensity change, we're looking at treating the non-Petrinax fuel use. So this is the fuel use data that we have for the facilities that isn't recorded in Petrinax in a conservative way. So what that means is we'll include the non-Petrinax fuel use if the benchmark is being scaled down, and we'll exclude adjustment to the non-Petrinax fuel use if the benchmark is being scaled up. And in those cases, we're happy to have conversations with folks, and if people have actual data for non-Petrinax fuel use for those sites that are new to their aggregate or have been removed from their aggregate, we're kind of happy to have those conversations also. So just on the next slide, please, we'll walk through a bit of a example of that. So as an example, if we were to look at the 2020 Petrinax fuel use intensity using the 2020 aggregate population or the composition of the aggregate for 2020, and we had a 100 meters cubed of fuel use per meters cubed oil equivalent. And then if we were to look back at that 2020 Petrinax data using the 2021 aggregate population, and we see that we had 105 meters cubed per meter cubed oil equivalent fuel use intensity, we would take, and I guess also in this example, the 2020 benchmark had been 10 tons of CO2 equivalent per meter cubed oil equivalent. We'd be looking to adjust the benchmark, in this case upwards, to reflect that essentially 5% difference. And so we'd be looking at setting a benchmark at 10.5 tons CO2e per meter cubed oil equivalent. As another example, if we have a bigger kind of change, so if that 2020 fuel use intensity had been 100 meters cubed per meter cubed oil equivalent, and then when we were working with the 2021 aggregate population, we see that goes up to 115 meters cubed per meter cubed oil equivalent. Then, because that's over our 10% trigger, we'd be looking to scale up only the Petrinax fuel use. So let's say that 10 tons of carbon dioxide equivalent per meter cubed oil equivalent 2020 benchmark was composed of kind of 2 tons that were non-Petrinax fuels and 8 tons that were Petrinax fuels. We'd be scaling up that 8 tons. So that 8 tons would see the 15% increment, and then we'd basically add back in the 2 tons from non-Petrinax fuel use. So that would kind of bring us to a total of 11.2 tons CO2 equivalent per meter cubed oil equivalent. So that's an example there. And then I think we've got one more kind of example here where we're moving the benchmark downwards. So here again, we're starting with our 100 meters cubed per meter cubed oil equivalent 2020 performance. If we cast back our 2021 aggregate population, we see only 85 meters cubed per meter cubed oil equivalent. Then we would be scaling down the 2020 benchmark accordingly to go from 10 to 8.5 tons per meter cubed oil equivalent. Okay, and just a reminder, a little bit on the benchmark periods. So we've provided some flexibility in the periods that can be used for benchmarking. And we have received indications from many aggregates of their preferred benchmarking periods. So the aggregate benchmarks to be set, again, using any 2 or all 3 of the years that span from the year before the aggregate entered tier and the 2 subsequent years. So sites that are brand new into tier are to use the prior year's data for the first year benchmarking, where it's representative data. So, and then as they move, as those new facilities move through time, they can again have a similar choice to other aggregates that are in the program in terms of the any 2 or all 3 of that span of years. And again, for just a reminder for folks for their 2022 benchmarks. So as always, if you'd like to request your benchmark to be reviewed or to submit a benchmark application for the 2022 compliance year, that can be received by September 1st, 2022. Reminder that benchmark applications need to be third-party verified. And again, when you're creating your benchmark application, the choice of production unit is important. And so you should be assessing which production unit will provide the most stable compliance outcomes. And we have some guidance in our quantification methodology for some tests around looking at different production units. And again, we'll assess the final aggregate populations for 2022 for impactful changes as we are doing currently for 2021, and look at adjustments there. So if you are submitting a benchmark application for 2022, please do keep in mind or consider what the final population of sites within your aggregate will be for the 2022 year. So again, just a bit of a note on the stability of benchmarks and what we're trying to accomplish with the benchmarks. So the intention, again, of the benchmarks is to set that aggregate specific historic reference against which your current year's emissions and production performance can be compared, right, for compliance reporting. So the idea there is to fix a benchmark in time that can be used for fairly comparing your current year's performance so that you see the outcomes of the pricing system. So historic benchmarks provide the carbon price signal for changes in performance for the aggregate. And also because the composition of aggregates may change as sites are acquired or sold, adjustments might be required to maintain a meaningful historic reference for the aggregate facility. I think that might be, oh, we got one more, okay. Yeah, okay, so that's that I think brings us to the end of that section. Let's see, I imagine there must be questions about that. Okay. When can we expect benchmarks to be issued for all facilities? So we're working pretty diligently at that. We understand a little bit the lateness of the hour. We have been impacted somewhat by some staff turnover that we've had, but I think we're getting our legs back under us well now. I guess I would expect a significant tranche of additional FSBs to be issued in the next, I'm going to say week or week and a half, and then we'll be working hard on some of the more complicated cases to get those ones resolved also. I don't know if I can give you a firm date to say when they'll all be issued, because I think we are open to have some conversation with folks, and in a couple cases we may initiate that conversation or send some draft benchmarks for discussion. Okay, question here. Can you provide some more details to industry around the benchmark adjustment assessment calculations you'll be providing? There's a lot of nuance to intensity changes driven by acquisitions, and I'm concerned a 2% threshold is far too low, depending how that is calculated. So we walked through some examples. Hopefully that's helpful, but happy to share some more detail if that's useful for folks. The understand that the 2% threshold is is a reasonably tight threshold, but it's also a fairly high proportion of our 10% reduction target. So we're trying to strike a balance there. So question, so what is the mechanism for the benchmark adjustments? Does AEP do it automatically, or must it be requested one by one? So we're in the process of doing those adjustments right now. I guess, as I mentioned, for 2022, we do have the, as always, the ability to receive benchmark applications or requests to review benchmarks. And we're also, of course, happy to have those discussions with folks for 2021 if the benchmark is needs more explanation or is different than people were anticipating. Does the AEP benchmark adjustment require re-verification? So to the extent that we'll be making those adjustments, we're going to be doing it on the basis of the Petrinax submitted data. So we're not asking for any re-verifications of that at this point. If people did have, for example, maybe emissions splits for non-Petrinax fuel use that they'd like us to consider, I think happy to have some discussion on that, and there could be maybe some emissions intensity or a re-verification required for that kind of data. So maybe Dragon, there's another question here. It would be helpful to skip back to the slide on the last example that we provided. Or maybe forward.
Sorry, which example are you referring to?
Yeah, it's slide 28, I think. Yeah, so the question is, for the benchmark reduction example where 2020 intensity was lower, does that mean the reduction requirement would be 18.5%, 10 plus the recalculated 8.5? So the example here, the adjustment, like again, I guess the 15% adjustment that was done here is due to the change in the aggregate population. So in this case, the aggregate has either sold off a number of facilities that were higher intensity, or they've maybe purchased a number of facilities that are much lower intensity. And so the adjustment is aiming to take into account the characteristic of the new aggregate population. So the benchmark has certainly been reduced, but I think the reduction target that we're aiming for is still consistent with the 10%, because the other portion of the reduction, or the other portion of the reduction, is due to the change in the facilities that exist in the aggregate. I don't know if that was clear, but the intended adjustment that we're making is to again get to a point where you have a 10% reduction expectation based on the historic performance of the collection of sites that you now have in 2021. Okay, will aggregates that did not change their aggregate population for 2021 still receive confirmation from AEP regarding their benchmark? Oh, sorry, Christina is answering that question. Or do we assume the benchmark is unchanged for 2020? You will receive a benchmark assignment for 2021. So the benchmarks that people have for 2020 aren't applicable for 2021. You will receive a new benchmark, and I think in most of those cases where people didn't have a change in their population, you should have already received your benchmark. So if you haven't, maybe reach out to us. Another question here: if an operator has identified incorrect fuel or production volumes reported in Petrinax in their base year or in a reporting year, would they be required to resubmit their historic compliance reports? Is there a specific threshold that must be met for resubmission? So typically what we do is we handle, I'm going to say, material omissions or misstatements retroactively, and non-material omissions or misstatements we look to correct go forward. Having said that, where we have data problems that are going to be in the benchmarking period, those are things that we would look to correct where possible for accurate benchmarking for the facilities go forward. Our materiality threshold under tier is a 2% threshold for sites with emissions less than 500,000 tons, and sorry, a 5% threshold for sites with emissions less than 500,000 tons, and a 2% threshold for sites that are greater than 500,000 tons. And more detail on the calculation of materiality is in our verification standard. Question, how will aggregates that have grown with new facilities be backcast? Will only facilities that existed in 2019 be included in the benchmark adjustments and applied to new facilities? So we'll look back at the years that you've indicated as your benchmarking years when we're doing this assessment. If there's no data, either production or emissions for that time period for certain facilities, then they wouldn't be, there'd be no adjustments stemming from those sites if they didn't exist at that time. Is the adjustment of benchmarks by AEP only completed if there is a change in the composition of the aggregate? Just want to confirm that an actual reduction in emissions intensity for an aggregate year over year would not be cause for an arbitrary adjustment. So that's correct. The adjustments that we're talking about here is really to look at the impact from the change of the sites that are included in the aggregate. And again, we're still looking at those historic periods. So we're certainly looking to recognize emissions intensity improvements year over year. Okay, and we have, I think, a similar question about the stability of the benchmarks in order to credit the improvements. So I think that's been answered. Can a company still indicate which benchmark years they would like to use for compliance year 2022 reporting? Yes, that would be fine if there's if people want to make that indication for 2022. Okay, maybe I'll just grab one more and then we can move along. Would the benchmark adjustment still occur for an aggregate that bring online their own facilities, or will the adjustment only apply for aggregates that were purchased transferred? Would the adjustment continue past the benchmarking period? So again, I think this is similar to the question that was asked about new facilities. So again, we're looking back at that benchmarking time period. So if the facilities weren't operating during that period of time, there wouldn't be a resulting adjustment. Okay, why don't we move along to the next topic, and then we'll try to circle back to any of these remaining questions when we get to our Q&A. So I think next up is tier review with Laura.
Thanks, John. Good morning, everyone. For those of you that don't know me, my name is Laura Grace Steinauer. I'm the Acting Director for Tier Policy and Economics. So thanks to John and Christina and team for giving me a chance, excuse me, to provide an update for the tier review that's coming up this year. Next slide, please, Dragon. Great. I'm sure everyone in this room is well aware, but tier came into effect in January of 2020. And since that time, it has met federal requirements under the Greenhouse Gas Pollution Pricing Act for 2020, 2021, and 2022. This means that the federal carbon pricing system, the output-based pricing system, which we refer to as the federal backstop, has not been applied in Alberta over this time. As you are all aware as well, there is a requirement in the tier regulation to complete a regulatory review by the end of this year. And this requirement was mandated to ensure the value of continuous improvement and that climate policy really is dynamic and needs to be agile to changing priorities. To be clear, the entirety of the regulation and tier system is subject to the review, but we will be using the tier review as a way to update the regulation and make improvements, focusing on how it integrates with other related policies, how it can attract new investment to the province, and if there's ways we can reduce administrative burden for regulated facilities as well. Next slide, please. As this room is probably well aware, this past summer, the federal government released their updated benchmark criteria that they will be using to assess carbon pricing systems in jurisdiction across Canada for the 2023 to 2030 period. Now, this is a marked change in the approval process from the federal government. As we know previously, TIER has been subject to an annual approval. This now marks a way of switching to more of a longer term approval for that 23 to 2030 period with an interim review in 2026. So TIER will have to meet these new federal requirements to be approved for that period of time. The federal government has signaled, as was mentioned previously by John, that in addition to following the federal carbon price schedule, which will be rising to 170 per ton in 2030, provincial systems like TIER will need to have equivalent emissions coverage to what is covered under the federal backstop. Additionally, they will need to be able to maintain the marginal carbon price signal on an annual basis over that 23 to 30 period. The federal government has let us know that they're going to be assessing the marginal price signal by looking at to ensure if there is a net demand for credits over generation on an annual basis. So this means in every year, we need to ensure that TIER has a sufficient demand for credits that is larger than the credit generation in that year. As John mentioned previously, Alberta is committed to maintaining jurisdiction for industrial carbon pricing. We've heard loud and clear from stakeholders that they'd like TIER to remain in the province and for the federal system to not apply. We're currently working with the federal government to learn and understand how the current TIER system may fall short of the federal requirements. That work is ongoing, but we do have an opportunity to use the TIER review to source support to the changes that are needed. We are going to be looking at engaging very heavily with stakeholders as part of the review process to try and find the most effective and efficient ways to make adjustments to the TIER system so that we are able to meet the federal requirements. This means that we're going to be having discussion with stakeholders on TIER. Sorry, John, if you go back one more. Sorry about that. We are going to be having discussions with stakeholders on key TIER design elements, such as emissions coverage, looking at updates to benchmark stringency, as well as, again, how it interacts with other key climate policies. Go ahead, Dragan, you can flip to the next slide there. So, as I mentioned, a big part of the review will be engagement. The stakeholder engagement will look very similar to how we've engaged on TIER in the past, particularly looking like how we engaged on the development of TIER back in 2019. I did notice a question in the chat wondering if we'd released any documents to support the review. We have not yet, but that is coming. The engagement will be kicked off with the release of a discussion document that will outline the key policy items that we're looking to get feedback from stakeholders on. There will be an opportunity to provide written feedback to the points in that discussion document. And again, I will mention that the entirety of the TIER regulation and the system is subject to the review. So if there's more feedback that stakeholders would like to provide beyond what's listed in the discussion document, there will be opportunity for that as well. We additionally will be hosting a series of sector-specific webinars and discussions with stakeholders, similar to the roundtables we used previously for the development of TIER. This will give us an opportunity to ask questions and engage in discussion on really key policy items for the sector. The conventional oil and gas sector is one of the roundtables that we're looking at hosting. We will additionally have opportunities for one-on-one sessions with industry partners or industry groups. I will caution though, the engagement at this point is looking to be very condensed, approximately over about a 6-week time period. So while we will be able to accommodate one-on-ones, it will depend on if there is availability and timing to do so. Indigenous communities and organizations will also be notified of the TIER engagement. And given directions or information on how they can participate and provide feedback if they wish to do so. We're currently finalizing the approach, but we anticipate engagement is going to be starting late spring, so just in the next couple of months. Ultimately, we're looking to have any regulatory changes we're looking at making done and implemented for January of 2023. So if you are interested in participating in the review, being notified of when that discussion document is released publicly, it will be available on our website. And if you register for the mailing list that's available on the TIER website, we'll be using that mailing list to provide notification. So that's a very quick summary of the upcoming TIER review and engagement process. Happy to answer any questions if there are any. Just looking at the list. So the last one I have here, will the TIER review determine a cap to the tightening rate applied to large emitters and opt-in facilities? We are looking at tightening rates as part of the scope with the review. Specifically looking at a cap, we haven't looked at that in great detail, but if there is feedback you'd like to provide on that, very open to hearing that feedback.
Yeah, I don't know if it's relevant, but like in a sense for the large emitters and opt-in facilities, the high performance benchmark does, I guess, currently act as an endpoint for tightening of facility specific benchmarks. So there, I mean, in a sense, that element exists in the current implementation, if that's what you're meaning. So the FSBs basically tighten over time to the point when they become equal to the high performance benchmarks under the current TIER implementation. Another question on participation in the sector-specific webinars, Laura, is a question: can anyone participate in any of the sector-specific webinars?
Yeah, so industry stakeholders are interested in participating in the webinars. You can definitely let us know once we have those set up and they're scheduled. We'll be providing notification via the mailing list. So if it is something you're interested in, please reach out to myself or John, and we can get you into that group.
A question here from Jim on coverage. So how does current TIER coverage compare to the federal benchmark?
So we've been working with the federal government to compare our coverage versus theirs. They have signaled to us that there may be one discrepancy that we need to include under TIERs, specifically looking at pricing flaring emissions from the conventional oil and gas sector. So we would like to engage with stakeholders on that coverage as part of the review.
Okay, thanks. And then it looks like just one more here. Was the discussion document that will be published reviewed with industry or internal to AEP only?
At this point, we don't have plans to have industry review the discussion document prior to its release. We will, again, looking for feedback post-release as sort of how we would like to make the updates to TIER.
Okay. That's good. I
believe that's it, John.
Yeah, looks like.
Okay, thank you so much.
Thanks, Dragan. Just want to add here, because we will be using the subscription emailing lists. I just want to remind the audience that there are two of them in place right now. One of them is for the TIER website, and one of them is for the commercial oil gas website. One is geared more towards the large emitters, second one towards aggregates. So the best thing actually would be to register to both mailing lists, just that you don't miss anything.
Okay, thanks, Dragan. And I think now we'll transition to the upstream oil and gas methane regulation update. Okay.
Good morning, everyone. Thanks for attending the webinar today. My name is Courtney Owishi, and I'm a policy advisor with the Strategic Climate Policy Unit of the Air and Climate Policy Branch. I'm going to be providing a brief update on methane emission policy and regulations. So as many attending this webinar already know, reducing methane emissions is a key component to the overall reduction of greenhouse gas emissions. And for the most part, one of the most cost-effective ways to reduce greenhouse gas emissions. So really, there are three key areas where methane emissions are produced in Alberta, with oil and gas operators being the largest, followed by agricultural operations and landfills. Alberta was the first regional government to introduce a methane emission reduction target for the oil and gas sector. This 45% reduction target is set for 2025. Based upon 2014 levels. So Alberta's employing a number of policy tools to achieve this target. This currently includes regulatory requirements under the AER Directives 60 and 17, voluntary action or market-based programs such as emission offsets, and also investments in technology and innovation. There's $57 million that were allocated from the Tier Fund, which has been invested into incentive-based programming like the Methane Technology Implementation Program, the Baseline and Reduction Opportunity Assessment Program, and the recently launched Alberta Methane Emission Program. Each of these programs are really helping to implement methane reduction technologies, gain better inventories on emission-producing equipment, or helping understand and quantifying fugitive emissions at oil and gas facilities. So back in 2020, Alberta signed an equivalency agreement with the federal government, which really allowed Alberta to operate under one set of methane emission reduction regulations and really saves significant costs to industry by implementing the most cost-effective rules under the AER. And in early 2022, that's back in January, the Alberta government published its first annual progress report, and that highlighted the progress made on emissions through 2020. The results at very high level showed that methane emissions went down by approximately 34% since 2014, and is on track to meet the 45% goal by 2025. Go to the next slide, Dragon. So getting into next steps, the Alberta government will be undergoing a review of the methane emission requirements this year, and that will be looking at the effectiveness of the current requirements to meet the 45% reduction target that was set back in 2016. And really the context of the risk review, it's really intended to update essentially or look at the new developments and practices, learnings from current and ongoing regulations, and the programming, as well as the emergence of new technologies to not only control emissions, but technologies that monitor and measure methane emissions. The GOA will also be looking forward on the current context of methane policy on national and international levels. As the federal government has made recent announcements, as many I'm sure are aware, over escalating emission reduction ambitions, and have signed on to new global pacts, such as the Global Methane Pledge, which is a multinational effort to reduce methane emissions by 30% from 2020 levels by 2030. The federal government also announced a 75% methane emission reduction target from 2012 levels by 2030. So that was announced late last year. Excuse me. And they've recently reaffirmed this commitment in the release of their emission reduction plan, which was released last week, I believe. So really, as we were looking forward, the GOA is really looking at a pathway to ensure that we do maintain regulatory jurisdiction. Like I mentioned before, we do have an equivalency agreement that is set to run through 2025. And obviously our intention is to maintain jurisdiction over methane emission reductions going forward. So as I did mention, we will be undergoing review and further details on the engagement that we'll be conducting is going to be forthcoming. So hopefully in the near future, we'll have further announcements on how that engagement is going to take place and what shape it may take form. And that's all I have for you today. Open to questions if you have any.
Great, thank you, Courtney. I think that brings us into our Q&A section of the agenda. So if people have questions on the methane initiatives or any other portions of the presentation today, we'll work through those, and we've got I think a few questions still open in the queue that we'll aim to get to also. Okay, so one question here from Pascal. Can you please confirm if an organization defined that they wanted to use 2020 and 2021 as their reference years, does this mean that for the 2021 compliance year, we cannot include 2021 benchmark results? In other words, for 2021 compliance, we only use the 2020 benchmark, even though our reference years will be 2020 and 2021. So that's correct. Once we got to 2022, we would include both the 2020 and 2021. But for 2021 reporting, we'd only be using the historic period, which would be the 2020 data. Okay, question here for Courtney. Sorry, can you please confirm when you expect the engagement to be for the methane review?
So we're expecting the engagement to initiate late spring, early summer.
Thanks. If all but one aggregate facility were sold, I'm going to interpret that as being facilities within an aggregate, and no production was reported for the remaining facility, is there still an expectation to report emissions for that year? I think the answer would be yes. You'd still have a compliance reporting obligation for that aggregate if it was still registered for that year. Okay, so there's another question here. How will benchmark adjustments be made if two aggregates are combined and have different benchmark units? So in, I guess, combining two aggregates, we would look to see if there is, I guess, a suitable benchmark unit that could cover both of those, I guess, prior aggregates coming together as one aggregate. We'd see for that combined aggregate, is there a benchmark unit that can work for the combined, the new combined aggregate? If there is, we would be looking to use the historic data in order to set the facility specific benchmark for that new aggregate. So we'd be looking at both the previously reported non-Petrinax fuel use, as well as previously reported emissions from Petrinax fuel use, in order to set the historic benchmark for that new aggregate. And we would also probably be having some conversation, or there'd be an opportunity to confirm the benchmark years that are desired for that new combined aggregate. There's a question here about, will benchmarks be redetermined when flaring emissions are regulated under tier? So again, that's that kind of topic of including flaring emissions in tier, and I guess how it could be included, I think is intended to be part of the scope of the tier engagement. And Laura, you can correct me if I'm wrong there, but that'll be I guess a topic that we'll be wanting to discuss and get feedback on.
Yep, John, you're correct.
I guess maybe similar response to a question here from Nazar. Any insights if and how the electricity benchmark may be updated for tier 2023 and potential impacts for aggregates to sell electricity to the grid? Laura, anything that you want to add from kind of that being in scope?
Yeah, so the updates to the electricity high performance benchmark are part of the scope within the review as well. We are looking at it in context with the recently renounced clean electricity standard as well. So hoping to engage with stakeholders on how that, if and how the high performance benchmark needs to be adjusted given those policies.
Okay. Just I'm moving back up to the top of the list here so we can kind of treat these a bit in order if possible. So if an acquiring company is a new reporting entity, so they are a new company to oil and gas, they have acquired assets mid-year from another company who is already in the tier program, can they also make a request? I believe to ECCC, and there's some carry on here. Does this include sites that were originally registered under the owner licensee that were where the owner is not the operator, assuming the owner has not changed and the aggregate is still the owner of the facility but not the operator? So, oh, sorry, I've mixed two questions. So to answer the first question, so if you're newly in this space and have acquired something mid-year, it'll be more of a two-step process with the federal government. So there'll be that first step, I think, still is to work with ECCC to request statement numbers for those sites that you're taking on, but you'll also have to register and obtain an exemption certificate through CRA in order to get the federal fuel charge exemption. And then I've maybe lost the context a little bit for this other question. I think it may have to do with our cleanup process. So again, the person responsible under tier is now the operator of record in Petrinax, and so that's what we're checking against to evaluate applications that come to us. And I believe we have previously kind of addressed any issues in that transition from 2020 to 2021, where we had folks that were licensees but not operators. So kind of go forward, acceptance of a facility into an aggregate is based on the operatorship, not the licensee. Is fuel charge like diesel propane applicable for large emitters too? So whether you're a large emitter or an aggregate facility, you by being regulated under tier, you have a similar exemption for the federal fuel charge. So you should be able to buy diesel propane for use on your tier site, exempt from the federal fuel charge, whether you're an aggregate or a large. Okay, so interesting question here. I don't know that we have an answer for this right off the hopper, but fuel used for electricity generation is sometimes reported as disposition gas or ABEG or ABCO code, not as fuel in Petrinax. How do you consider that fuel in your benchmark adjustments? Yeah, so that's a good question. We may need to take that away. If you have a specific aggregate that you're considering or that you want us to pay attention to those factors for, let us know. Again, the idea is that we're applying that fuel use intensity adjustment to the reported emissions. So as you're saying, if we don't include that in the fuel, we could have that adjustment wrong. So if you have an aggregate where that's an important factor, maybe follow up with us after the webinar, and we can do a double check on those fuel categories. So there's a question here, which I'll read. What is the process if a facility in an aggregate increases activity year over year such that it emitted less than 10,000 tons in a benchmark year, but now emits greater than 10,000 tons in a compliance year? This can cause a change in minimum reporting methods for the facility within the aggregate. So does the benchmark for that facility need to be adjusted? A flag for verifications is whether different methods are used at a single facility year over year. So that's correct. We're looking for consistency in methodology year over year. Our understanding from conversations with Environment Climate Change Canada is that any of the methods that we've made available in Chapter 15 of the AQM are acceptable methods for greenhouse gas reporting program purposes. So there shouldn't need to be a transition driven by the 10,000 ton threshold in our understanding. If people do wish to transition from one methodology to another at different sites, we may have to work with you on benchmark adjustments to take that into account. So a question here, a specific case. A facility has two fuel meters, one for the fuel used at the site and one for the fuel used for an electricity generator that has been recently installed at the site. The generator is produced electricity for self-use at the same facility, not sold to the grid or a third party. Fuel use at the site, first fuel meter was reported under fuel and Petrinax, but the fuel used by the generator, second fuel meter is reported as dis gas to ABCO. Considering the generated electricity is used at the same site, should the fuel used by the generator be included in the tier compliance report? If yes, should it be considered as non-Petrinax fuel? So if that fuel use is at the site, it should be included in the compliance reporting. You may want to give some consideration if this is a significant factor about the opt-in option for the facility, because our opt-in facilities have a more complete accounting for electricity and self-generation. So that might be something that you want to discuss with the department in terms of the potential for or the benefits and disbenefits of opting in that site. Can operators change their selection of reference years for their aggregate facility? For example, if selecting 2019, 2021 for the 21 reporting year, can they switch to 2020 and 2021 for the 22 reporting year? Yeah, I think we're open to have those discussions and to have you indicate you've changed your mind on your preference of years. So feel free to reach out to us, I guess, before September around benchmarking years for 2022. Will there be any adjustments made for the 2019 aggregate benchmark units for changes in the fuel flare categorization, the activity codes in Petrinax as a result of the D60 changes that started in January 1st, 2020? so far we haven't contemplated making adjustments to the benchmarks for those changes in the reporting codes. Like I think our view so far is that's probably kind of over our 2 or 3 year benchmarking period, fairly de minimis for most sites. So we haven't been looking at making adjustments for the changes in the fuel flare categorization at this point. If emission factors in the tier GHG quantification methodology document changes in the updated versions, are we required to continue to use the same emissions factors used in the initial quantifications to use consistent methodologies over the years, or must the updated emissions factors be used in the emission estimates? Also, if more detailed information is now available, are we still required to use the methods used in the initial estimations? So maybe I'll just give a pretty general answer to that, just to say that we are looking for consistency in methodologies between benchmarking periods and compliance reporting in order to properly reflect changes in the emissions intensity for the facility. So if we were to change our default factors in the AQM, we would probably be looking to adjust or realign the benchmarks for the facilities to reflect the new factors. Another question here, maybe for Laura, if Laura's still here. Is there a potential for 2023 tier updates to include venting on top of flaring?
Yeah, I feel like the standard answer to most of these questions, John, is that we want to talk to stakeholders about it. So there is potential for it, but again, we want to hear stakeholders' opinions on if that should be included, and if yes, how.
Thank you, Laura. Okay. It looks like we've run most of the questions to ground. Maybe we'll pause for a few seconds to see if there are any more questions for our last few minutes. Okay, well, not seeing any more questions, I guess, as I mentioned before, if you do have more questions, our email box is available. So thank you for attending the webinar today, and also thanks to all the presenters that presented today and were able to give an update. I think that was really valuable. Again, please do send in questions if you have them. We do prefer to get questions before the compliance submission. It's a little bit easier to work through than to have them after the fact. So with that, we'll close the webinar and have a great rest of your day.